But Marcel, I know I'm embarrassing you by telling you you're one of those people of this generation. It's not just me saying it. There's a lot of people that point to you.
The upside that is available to us, in our opinion, at the Moss Mine is very significant. It has to work, and we'll do everything we can to make it work.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, guys, Jay Martin here, CEO of Cambridge House, for a quick company update. Last summer, I built a position in a company called Eclipse Gold Mining. It was a single asset explorer in Nevada, highly speculative, but I loved the management team and the money behind this deal. I have since had the CEO, Mike Allen, here on the show, and I covered this company in depth in my newsletter. Now, last week, Eclipse put out some very significant news. So it was Marcel de Groot, the co-founder of Pathway Capital, that initially turned my head to Eclipse. It was his involvement that got me excited. Marcel is one of the smart money guys in this business that I always pay attention to. And so I invited Marcel back on the show to update us on what this merger with Northern Vertex means for Eclipse shareholders. On Monday, you guys put out this release. It's an exciting merger with Northern Vertex. Marcel, I want you to shed some light on what this means for Eclipse shareholders.
Sure, Jay. This is something we've been looking at for a while. With the Eclipse, we always wanted to build a portfolio. We were very excited about the Hercules asset. We've got 28 drill holes that we're waiting for results on. And one of the challenges is labs are backed up and we're waiting for that. But with this transaction, what we're getting is we're getting a now asset. We've been in talks for 6 months. Mike Allen has been looking at this project for 10 years. And what we see is a project that's a producer, but we see great exploration potential here. They've been handcuffed by the fact that their permits were on the patented grounds, and they have quite a large area around those grounds that they've recently opened up. And so, because what you've got is you've got 1.5 kilometers of veins that you have about 13 kilometers of veins, and only 1.5 of those kilometers have been tested thus far. So you've got huge exploration upside. And they're also coming, it's great timing because, you know, making a mine work is a very difficult task. They just smoothed out operations. They just had a great quarter. I think they generated $10.7 million in cash flow last quarter. They just got grid power, better water access. There's been a number of improvements with this transaction. We're cleaning up their capital structure. They just paid back $8.6 million in convertible debentures out of cash flow. 45 million warrants are going to be disappearing as a result of this transaction. So everything's aligning for us really well. And so what we see is we see a situation where we're adding an asset. We'll have 2 exciting large assets in the Walker Lane trend, which our geologists know very well. And our technical team can add a lot of value to the Moss Mine that Vertex owns because of the exploration expertise we can add, as well as production finance capabilities, etc. And so we see this as a really exciting merger. It's a combination of the teams. I mean, our team, we're all locking up our stock for a year. There's no change in controls. We really believe in what we're doing here. And what we see is we just see the ability. And the other thing that's really critical is any success we now have at Hercules is going to be trading at a higher valuation, at a higher multiple, because we're part of being a producer. But I don't think we're giving up the upside that is available to us, in our opinion, at the Moss Mine is very significant. And that's what's, so I think what we're doing is we're taking away downside, but not without giving away much upside. So it's a very creative transaction in our view, very exciting risk reward profile. And they've got some good pieces in place. I mean, Geoff Burns on their board is 15 years of running Pan American, then grew with Dan O'Flaherty, grew Maverix into a very successful company. They've got some quality people over there that we can work with. And so we're very excited about what this is going to mean for our shareholders.
Yeah, I mean, that's a key addition. Geoff Burns, he's the founder of Maverix Metals, former CEO of Pan American Silver. I mean, household names in the resource business. Having him join the team, it's very significant. And I want to talk about Doug Hurst, who is stepping up as chairman. Is that correct?
Yeah, Doug's a superstar in the business. I mean, I really enjoy working with Doug. If you look at Doug's track record, I mean, he's a co-founder of International Royalty Corp, which sold for $800 million to Royal Gold. He's a co-founder of Newmarket, which of course created billions of dollars in value with the takeout by Kirkland Lake. He's a co-founder of Caliber. He doesn't get involved in many things. He's a geologist by background, was an analyst on the street for many years, but he doesn't get involved in many things. But when he does, he writes a big check, gets involved, and really rolls up his sleeves. And the track record is unparalleled. It's a very successful individual.
Right. Yeah. And I think so just to back up, yeah, international royalties sold to Royal Gold, was it 700 million?
Yeah, it was a pretty significant in that range. Yeah.
Right. And Newmarket, of course, sold to Kirkland Lake for $1 billion. Okay. And, I actually didn't know Doug. You're right. He does sit in the background a little bit. He's very quiet. And as Mike Allen described him to me, he's the quiet guy that sits at the boardroom table and doesn't act until he does. And then he's all in on something. It's that elevator approach.
Yeah. And Doug has a very strong network in the mining industry. A lot of very accomplished people are fans of his, and I think he's going to add great value, and is perfectly suited to be chairman of the company moving forward here. Okay,
so what excites me about this is the $10 million in quarterly free cash flow, and what that allows you to do in terms of the future. And I could speculate what you might do with your access to capital, looking at your track record with companies like Equinox, for example. You've done a great job at bolting things together to make something great. I'm not well, let's just leave it at that. But let's talk about the Hercules project a little bit. It was the initial asset, after I got through the people at Eclipse. Then we look into the asset and the jurisdiction and all of this. So give us an update, Marcel, on Hercules for anybody who hasn't taken a peek since we published in September.
Sure. I mean, we've been very active on the project. We've had a couple of drill rigs turning. We finished up probably a week or two back as the snow starts to fall in that area. And basically, we've also just recently gotten our geophysical information report coming in, so we're processing that. We've been consolidating the area further. We're seeing lots of targets that are coming up, and so you'll see a couple of smaller deals that we've done in the past month or two, where we've increased our position now over 100 square kilometers. So we've got a big trend there, lots of targets. Looking, very anxious to see our drilling results here, and very excited about what this can become. I mean, it's a big system. I mean, we've got drill holes that over the course of many kilometers on the property that have successful results on them. Lots of high-grade samples at surface, lots of structures presenting themselves, and so we're pretty excited about the Hercules project, and we'll be eager to get back to work when we can in April.
Okay, very cool. So to recap this a little bit for anybody who's a shareholder of Eclipse or now looking at this story, and I think it's more attractive today than it was in the summer. We're looking at the Moss Mine, which is in production with tremendous upside. Like you said, we've barely scratched the surface on what that deposit might become. At present, generating about $10 million quarterly in free cash flow. I think it's safe to say you guys are probably going to be focused on M&A opportunities in the future. Would you argue that, or do you think I'm on the mark?
No, I think that's right. I mean, we've got a lot of value that we can add in both of our existing projects, and we'll focus and do that. It's very straightforward too. I mean, just drilling along strike, it's pretty simple exploration, and we see a lot of opportunity at Moss to add value, to get a lift, and continue the work at Hercules and show that, hey, we've got two significant assets here. But in parallel with that, scale never hurts you. And I think as we get our share price up from successful exploration and operating activities, I think that given the network of the people involved, that a lot of opportunities, some proprietary, are out there for us to continue to grow. So we'll definitely be continuing to grow the company.
Okay, and just to put that in context, when Marcel talks about the potential of Hercules, and I know when I sat down with Mike Allen, it was his belief this could be a generational mine. And he's speaking from experience. You look at, and you told me this last time we spoke, 300 to 400 opportunities before you'll strike on something. That's pretty typical. Yeah,
I mean, you have to look at, there's a lot of projects out there. I mean, one of the things that we have in our office, we've got a huge trap line. I've been in the space for over 20 years now. a lot of the guys on the floor, they've been in this space for 40, 50 years now. And so that gives you a large trap line, and you have to look at a lot of projects because everything has to line up. You have to have the geology, the metallurgy, strip ratio, things happen so that you've got an attractive risk-reward equation. And so, because once it's easy to get into, my business partner Dave DeWitt always says, it's easy to get into a deal, hard to get out. And so you want to look really closely and carefully and understand what you're getting into, because once you're in it, I mean, we tend to be in a long time. You take Equinox, for example, the companies that became part of Equinox, my first investment went back in 2004 already. And so we're long-term people, just like in this company here with this merger. The people involved will be writing a check every round, and the checks tend to get bigger every round. And we'll be in there because of this, it has to work, and we'll do everything we can to make it work. And that's why looking at lots of projects, understanding them well before you get involved and commit to it is critical.
Okay, no, I appreciate that. And, that's what I saw with Eclipse. That's what turned my head. I think between Mike at the time and management, you guys owned over 40% of the company. Collectively looking at the people involved, there was something like 4.5 billion in previous acquisitions. If you look at the collective portfolios of all the players at the top there, we always talk about finding the next gen of winners. And, the famous, again, Rick Rule quote is, if he had only stuck with the top 3 or 4 people in the industry and put all of his money with them, he would have made 10 times the cash and worked a 10th as hard. Easy to say in hindsight. Yes, he could have just gone with Lucas Lundin, Ross Beatty, Ian Telfer, and Robert Friedland. But, you have to go to the school of hard knocks to find those individuals. But Marcel, I know I'm embarrassing you by telling you you're one of those people of this generation. It's not just me saying it. There's a lot of people that point to you. People like yourself, Mark O'Day, Ivan Bebic, Marin Katusa. These are the people that I follow for anybody who's watching this channel, and they all play different roles in the industry, but what they have in common is they're the winners in this business. They're the winners of my generation that are consistently outperforming and delivering quality and finding a way to win, which is what we all want. So